There's a system operating right in front of our eyes, but most people can't see it. A mechanism so deeply embedded in our economy that it transfers wealth from the poor to the rich every single day. And the worst part is that it's completely legal, even encouraged by governments worldwide. Every time you swipe your credit card, every time you pay rent, every time inflation rises, someone is getting richer while millions get poorer. And today I'm going to expose exactly who profits from poverty and how this invisible wealth extraction machine really works. What I'm about to reveal will fundamentally change how you see the economy, and it might make you angry, but understanding this is the first step to protecting yourself. If you want to understand who's really controlling your financial future and how to escape this trap, hit that subscribe button right now, like this video. Drop a comment below telling me if you've noticed this wealth transfer happening in your own life, because this information could be the difference between staying trapped in the cycle or breaking free. Let's start with the most obvious culprits, the banking system. When a poor person needs money, they go to a payday lender and pay 400% annual interest. When a rich person needs money, they get a loan at 5% interest using their assets as collateral. Banks literally charge the people who can least afford it the highest rates, while giving the wealthy access to cheap capital. This isn't an accident. This is the business model. In 2024 alone, payday lending companies extracted over $9 billion in fees and interest from low-income Americans. That's $9 billion flowing from the poorest neighborhoods directly into the pockets of financial institutions and their wealthy investors. Credit card companies are running the same playbook. The average credit card interest rate hit 24% in 2024, but here's the twist. Wealthy people with excellent credit scores pay almost nothing, while people struggling financially pay the maximum rates. A person making minimum wage might pay $2,000 per year just in credit card interest on a $10,000 balance. That's 2 months of their salary going straight to banks. Meanwhile, someone making $500,000 per year pays their balance in full and collects reward points worth thousands of dollars annually. The system literally pays the rich to use credit while punishing the poor. But the banking system is just the beginning. Landlords and property owners represent one of the largest wealth transfer mechanisms in modern history. Here's how it works. A wealthy investor buys a property with a mortgage renters pay that mortgage for them month after month. And at the end of 30 years, the owner has a fully paid asset worth potentially millions, while the renters have nothing but decades of receipts. The landlord class now controls over 22 million single-family rental homes in America alone. That's 22 million families building someone else's wealth instead of their own, paying rent that increases annually while wages stay stagnant. Real estate investors use something called leverage to multiply their returns. They might put 20% down on a property in finance. The rest, the renters, pay the mortgage, property taxes, maintenance, and still leave profit for the owner. Meanwhile, the property appreciates in value, the owner gets tax deductions, and wealth accumulates automatically. A single investor can control 10 properties worth $5 million with just $1 million down, and armies of working-class renters fund the entire operation. This is wealth extraction at industrial scale. Inflation is perhaps the most invisible thief of all. When central banks print money and inflation rises, the wealthy own assets that appreciate: stocks, real estate, gold, businesses. These assets rise with inflation or even outpace it. Poor people own cash. Their savings account loses purchasing power every single day. Groceries cost more, rent increases, gas prices surge, but their wages barely move, if at all. Between 2020 and 2024, inflation reduced the purchasing power of the dollar by approximately 23%. That means someone with $10,000 in savings lost $2,300 in real value. While someone with $10,000 in stocks likely gained 40% or more, the wealth gap isn't just growing, it's being engineered by monetary policy. The corporate world has mastered this game too. Large corporations can access capital markets, issue bonds at low interest rates, and raise billions for expansion. Small businesses and entrepreneurs from poor backgrounds get denied for small business loans or pay predatory interest rates that make success nearly impossible. Walmart can borrow $100 million at 3% interest. Your neighbor trying to start a local business pays 18% or gets rejected entirely. This capital access gap ensures that wealth concentrates at the top while opportunity remains scarce at the bottom. Insurance companies run a similar scheme. poor neighborhoods pay higher premiums for auto insurance homeowners, insurance and health insurance, despite often having lower claim rates. Algorithmic pricing targets zip codes, credit scores, and demographic data to extract maximum revenue from the most vulnerable populations. A person in a low-income neighborhood might pay $3,000 annually for car insurance, while someone in a wealthy suburb pays $1,200 for the same coverage. This poverty penalty adds up to billions in wealth transfer annually. The tax system completes the picture. Wealthy individuals pay capital gains taxes of 15 to 20%, while working-class people pay income taxes up to 37%. Someone who makes money from investments pays less tax percentage-wise than someone who works 60 hours per week at 2 jobs. The carried interest loophole lets hedge fund managers pay lower tax rates than teachers and nurses. Offshore tax havens hide trillions in wealth from taxation, and corporate subsidies funnel taxpayer money directly to profitable companies, while social programs face constant cuts. Here's the really disturbing part. All of this is interconnected and self-reinforcing. The wealthy use cheap borrowed money to buy assets. Those assets generate income taxed at low rates. That income buys more assets, and the cycle accelerates exponentially. Meanwhile, poor people pay high interest rates that prevent wealth accumulation, rent increases that prevent home ownership, regressive taxes that limit income growth, and inflation that destroys savings. It's a two-tier economic system disguised as a free market. The financial industry, real estate investors, corporations, insurance companies, and even government policy all participate in this wealth extraction. They're not villains in a conspiracy. They're rational actors operating within a system designed to concentrate wealth upward. Understanding this doesn't mean accepting it. It means recognizing the game so you can learn the rules and play strategically. Make sure you're subscribed to this channel and share this video with everyone you know, because awareness is the first step toward change. The system profits from your ignorance. Knowledge is your weapon, and the more people who understand how wealth really flows, the harder it becomes to maintain these exploitative structures. The question isn't whether this system exists. The evidence is overwhelming. The question is what you're going to do now that you know the truth.